You are now live.
Okay. Well, somebody, Senator McDonald, can you got it on the either screen?
I got it right here.
He's, okay, Senator Brock's got it.
Out of practice.
Senator Brock is getting to be our got it man here.
It's the only exercise I get.
That's true. Pushing the buttons, a very fit index finger. Okay. Committee, I was saying, we have the transportation bill, which is approximately 75 pages long. And Faith made an executive decision not to kill a forest. And we did not print out the 75 pages for everyone. It is posted because I have a feeling we have maybe one page to look at, which is fees. That's all we usually have to look at. So Anthea Dexter Cooper's here and Chris Roop, and I'm not. Anthea, you gonna walk us through this and show us?
Madam Chair, can we go directly to the fees for the Franklin County residents? I heard we were going to generate a little more revenue.
Franklin County is a fee-free county in Vermont.
Well, we ought to put a toll booth up there then,
Right,
just
right.
south of the border.
The entire county is a free
Okay,
enterprise.
I know it's Friday and I'm trying to get you out of here. I need cooperation. Okay, let's start.
Okay, thank you. So for the record, Anthea Dexter Cooper from the Office of Legislative Counsel. I will quickly walk you through, I want to say it's the 5 or 6 sections that have to do with fees, assessments, or very briefly civil penalties. And I'm just going to fly by the civil penalty stuff. And then I was thinking Chris could tell you about the fiscal impact to the state as calculated in his fiscal note. And I think it'll go really quickly. And I will share my screen if it works for the committee so that you can easily get and see the language that I will be walking through.
Okay, sounds good.
Okay, so we are working from the Senate Transportation's strike all amendment of the T-bill. Your chair has indicated that it is approximately 70 pages, and I'm going to make life really easy for you, and we are going to jump all the way to page 51. Section 36 repeals all of 5 VSA Chapter 5. 1988 Acts and Resolves number 160 repealed one section from the chapter, 5 VSA section 63. It's the first section of the chapter, which would allow for an assessment on common carriers, which is basically the transporter of passengers or goods, but it did not repeal all of the administrative provisions related to that assessment. That is the balance of 5 VSA Chapter 5. It is now obsolete because there isn't an assessment on common carriers. This would be repealing all of the chapter and its sections 64 to 67.
Okay, just help me understand this. We repealed everything else in 36 that has to do with assessments to support the Agency of Transportation and the Transportation Board. But somehow this one section
was repealed, and it should have repealed the entire chapter back in 1988. So we were doing what should have been done in 1988.
But no change to the real world, just
Nope.
true up.
somehow we missed this.
Yeah, so like it had the provisions related to appealing an assessment, but there is no longer an assessment, so there's nothing to appeal. This would be repealing the section.
Okay, that makes sense. We repealed the assessment, but not the whole chapter on how to appeal the assessment we had already repealed.
You got it.
Got it. Senator McDonald, I think you're going to report this.
Okay. Our next section is on page 53, section 38. This
Oh, no,
deals.
I want to look at 37. As a realtor, I'm very interested in on-site premises signs. I'm kidding. We can keep
I think
going.
this section is really cool. I'm happy to talk about it.
Okay.
So section 38, these are the fees for the 1111 permits. Those are the right-of-way permits. And there is in law currently a $100 permit that is for utility installations. And then it says, including each direct connection to the state highway stormwater system. So for purposes of how the Agency of Transportation has been interpreting and administering this, they only charge the right-of-way permit, that 1112 permit fee for the 1111 permit for the direct connections, not each connection, but the one connection to the state highway, and it is only the subsurface stormwater system. So this is aligning statute with current practice and adding a definition for subsurface stormwater system. One thing just to point out, since I know this committee deals with utilities, is this would not be changing anything for how like utility poles are dealt with. And while it's not on the language that you see here, there is still that blanket annual permit for utility installations that's $500 per year. So it wouldn't be like the $100 per pole each time they needed to change it.
Okay, this is a utility right of way. There is a
Utilities-
$100 fee. And is this the utility right of way? The right of way along town roads that
This is-
give at least one member of the public harps on us about a lot, that they are paying it. And you're saying that they've only been charging it when they are doing a direct connection to a subsurface stormwater system, meaning they're only charging it when the poles running along Route 52 pipe in to the stormwater drainage system. Is that
Not quite. So it's not
quite? Okay,
changing.
somebody's gonna have to explain this on the floor, so.
Yeah, I'll try again. So it's not, for example, changing anything about utility poles. I was simply mentioning that
Okay.
to say nothing's changing there. But if someone was going to be having their discharge go into the state highway stormwater system,
Okay,
under current practice, they only charge the fee if they're connecting to the subsurface stormwater system. So what it's not capturing is if you have runoff from your driveway that's going into a culvert or a ditch along the state highway, they are not collecting that $100 fee for that connection there to the state highway. It's only when it's actually going into the subsurface stormwater system that they're assessing that $100 fee. Everything having to do with utility poles is staying exactly the same as it is in current law, and my understanding is how the agency interprets that. I just mentioned it because I know you deal with utility poles more than things that are going to the subsurface stormwater system.
let me see if I've got it right this time. The present practice is that they are only charging the $100 fee when a project puts a drainage, connects to the city or to the state water runoff system, meaning underground with pipes or, all right, but when my driveway in a rainy day, well, actually, the city street drains into my driveway, and they put in a culvert. But if my driveway were uphill and drained into the city and there was a ditch along the road and that ditch took the runoff from my property away, they haven't been charging. And is this making clear that they are not going to be charging?
Yes.
Okay, so what this is doing is clarifying in law what the current practice is.
You got it.
You only get charged if you actually hook a pipe in, or I guess in some way connect directly to a sewer system.
Yep.
Stormwater, yes, I'll find the right name, all right.
Yeah, and if I may, Madam Chair,
Stormwater.
if I may, Madam Chair, the other
Yes.
thing that, I mean, Anthea, you and Anthea are exactly right. This language just conforms the statute to the existing practices. I described this briefly in the fiscal note. This is not expected to have a fiscal impact, and these permits are relatively infrequent. The agency testified to the House Transportation that approximately 10 applications over the last 6 years have been received. And the only other sort of clarifying item in here is, the agency's practice has been to charge a fee on a per application basis, not on a per connection basis. So that's why you see line 15, the word each is crossed out, is just to conform the statute to the existing practice. And the agencies also testified that these applications very rarely involve more than one connection to the stormwater, the closed stormwater system anyway.
Okay. Okay, committee questions. Good. Okay, next, where are we going next, Anthony?
We are going to page 59, very briefly, just to talk about on the second, section 49, on page 60, subsection C, this would be increasing a civil penalty. I'm just mentioning it because it has a fiscal impact. I know your committee doesn't have jurisdiction over that, and Chris has included it in his fiscal note. They are setting them in this language at $1,000 and $2,000. That's the same as the civil penalties for if you go through Smuggler's Notch, or if you go through Smuggler's Notch and you obstruct the flow of traffic. Under current law, for going through a covered bridge that has a posted limit that you're above, it's $200 for a first violation and $300 for a second or subsequent.
Okay, and a civil penalty, so it says 300 and 600, that's what it's being raised to?
It is currently 200 and 300, and it would be going to 1,000 and 2,000. 1,000 if the violation results, sorry, $1,000 for the,
Got 60.
goes through it,
All right.
2,000 if it impedes the flow of traffic.
Section 40.
Okay, there it is. All right, and this is, oh, covered bridges.
So if you want to see the
All right, so
current-
if you go on, this is all right, you go on a covered bridge with a load in excess of the legal load, this is the fine. I assume the risk that you might take down the historic covered bridge is figured in there. Senator Bray.
Anthea, do we address elsewhere when someone goes through a bridge and damages it? Usually, I think because either the load or the vehicle itself is too large.
That was over on 59, I was looking at it.
So section 50 adds that new language, subsection 1434C, for what a owner, driver, operator, and this is very antiquated language, can be liable for through civil suit. And then in section 52, it gives a municipality, county, or state entity that deploys police, fire, ambulance, rescue, or other services to aid an operator who is stranded due to a violation of 3 different statutes, one of which is the violating the posted limit for a covered bridge. So there's the ability for the municipality to recover their damages, there's the civil penalty, and then there's the ability to be liable for the cost of recovery.
Okay. But how about when someone goes through, so I've seen this happen an astounding number of times at different bridges over near where I live. Someone goes through and they clip out bracing because their truck is too big, and the repairs are extensive and expensive. Do we have a way to address that?
Yes, so under section 50, by adding 1434C on line 5, it's saying that the owner, driver, operator, or mover of any motor truck, tractor, trailer, wagon, cart, carriage, or other object or contrivance that is moved or operated on any highway in violation of any of the provisions of those listed sections, and 1434C is going through the covered bridge in violation of its width, height, or weight limits, then the state or municipal corporation in which the act is committed for damages to a public highway or bridge, there will be liability to that entity occasioned by such moving or operating to be recovered in a civil action in the name of the state or municipal corporation, or in an action on bond provided in this chapter, et cetera. And this is antiquated language, but it is adding the violation of the posted covered bridge statute, 1434C, that we saw above, to the ability for recovery for damages that are caused.
Well, thank you. I suppose I shouldn't be asking these questions, but I don't get to see the covered bridge provisions very often. Thank you.
there's a lot of language that was sort of related to moving the covered bridges language from Title 19 over to Title 23. And I will not bore you with the details about it, but it, for example, makes it a traffic violation. So it goes to the Judicial Bureau. So I think more tickets will be issued for it. And it'll be interesting to see if this language is enacted, if it does have an effect on operator behavior when it comes to covered bridges.
If you accidentally burn a bridge down by abandoning your vehicle and it starts on fire, is that covered now? That happened to a snow machine on a bridge up near Senator Starr.
Yeah, I remember. I would need to look to see what the other included statutory citations on lines 4 down to 6 include, to see if it would be captured under statute there. There could be a negligence per se argument there in terms of you violated a safety statute, so you could be found negligent there. I would need to look at the statutes. And there also could be recovery just because it was negligent potentially to leave your flaming snowmobile inside a covered bridge and not try and get someone to come recover. So I would need to know more details about it and spend more time with the statutes to answer that better.
All right, well, thank you for taking the question, and I would put it that as the very last item on any kind of to-do list you're keeping at the moment, so thanks.
Senator Brock.
On the penalties, the 1,000, 2,000, I saw there was a penalty for repeat offenders, but it's covered by the control sticker on the bottom of our screen. I wonder if we could see the bottom of it to see what the multiplication factor is.
It doubles for a second or subsequent,
Doubles?
and
Okay.
that matches the smuggler's notch penalties,
Okay.
which are addressed in section 40, but they're not changing in this language.
This is for someone who twice smashes into the same covered bridge?
It could be a different covered bridge.
Or it just goes over
We got
the
covered
legal
bridge
limit
issues.
in terms of weight.
Yeah,
Yeah, more like,
It doesn't have to be an accident.
Yeah.
I mean, they're found to do that. You gotta believe that's a hard one to catch.
Unless something does happen in the bridge.
Great. We haven't gone very far.
We haven't gone very
We
far.
haven't made it across the bridge.
Okay, we're still on the bridge. On page
Section 40.
48, 49, that's where we were.
Yep.
Okay,
Yep, section 49, page 60.
What's
okay.
next?
And this ups the penalty to 1,000 to 2,000, or 2,000 and 2,000. Or basically not taking care of a covered bridge, all right.
Okay, we are now going to jump to page 67. Sections 57 and 58 kind of go together. You may remember it would have been, I think, 4 years ago now, when you addressed the fact that the state was saying, we can't charge for individuals to use the state's charging stations, like the ones that are on the bay of legislator parking, because you did not give us the ability to do that, and that is a fee, and you, General Assembly, set fees. So you put into 32 VSA section, or you put in as 32 VSA section 604, what would be redesignated as subsection A, and it gives an agency or department that owns or controls electric vehicle supply equipment, as it's defined in statute, the authority to establish, set, and adjust fees for the use of the electric vehicle supply equipment. The agency or department may establish fees for that charging at less than its costs, to cover its costs, or equal to the retail rate charged for the use of that charging station if it's available to the public. And then the fees collected go back to the account where the electric operating expense comes from. They haven't started doing that. And this language, per the repeal language, the sunset language that was added at the same time 4 years ago, will be up on July 1 of 2022. The Agency of Transportation originally asked for the sunset itself to be repealed, thereby giving them the authority, the agencies or departments that have owner control charging stations, the ability to, going forward, assess fees in accordance with section 604, which gives them a lot of flexibility to do that. The House Transportation put that at 3 years, pushing out the sunset to July 1 of 2025, and added in an annual written reporting requirement in subsection B. And the Senate Transportation Committee has made that an oral report, but it's still covering the same material. So it's requiring the Agency of Transportation and the Department of Buildings and General Services to make staff available each legislative session beginning on January 15th to give an oral presentation that would provide an update on the state's efforts to collect fees for the use of that electric vehicle supply equipment that the state is owning or controlling under subsection A. And as part of that presentation, they would need to make available a copy of any fee schedule, along with an explanation as to whether or not the fee schedule is covering the actual expenses of the charging station, including its electricity costs. It could be that 3 years from now, you have gotten 3 reports, and the end result is maybe the state shouldn't be in the business of owning and controlling charging stations, and we should have an agreement with, for example, ChargePoint, that they set the fees and we get back our electricity costs, and we are out of the business of having fees for charging stations. But this at least gives the agency and the department some flexibility over the next 3 years to figure that out, but requires the annual updating back to the General Assembly.
Senator Pierce.
I guess I don't quarrel with this, but I'd like to understand why they decided 3 more years as opposed to just making it permanent. Do you have any sense of the decision?
I think the thought in the House was partially, you haven't started doing this yet. So we want more information as to, kind of why you haven't. And then the Senate, I think, was leaning more in the direction of, we need some more information, but we think the writing on the wall is that 3 years from now, maybe all of section 604 will be reworked to account a sort of different approach in the business model there. And if you think about a parallel being drawn to gas stations, the state isn't in the business of, setting how much it's going to charge for a gallon of gas. And while the state is very involved in the implementation and having charging stations rolled out across the state now, it could be that 3 years from now, the market is different and the state wants to be involved in a different way.
Thank you.
So this is basically treading water until we get more charging stations up, get more data.
Well, but it's
extended.
specific to where we're kind of charging
Right.
fleet vehicles and our own state-owned chargers. Anyway, this
The one's fine.
Yeah,
Yeah,
the
my
ones
car's
down
on
here
there.
that can be, you can use.
Which car do you have? The Bolt?
You got it off of your street?
I'm driving my electric car to work and back.
From Brookfield?
Oh, Williamstown, where I live.
Really? Okay. Mud season must have slacked off.
Yeah, there's report, the road from my interstate to my house had no mud season. 0.
Wow.
2 miles.
Because 2 years ago,
4 years ago, I couldn't get home
Oh, no.
during the winter months.
yes. Okay,
All right.
we won't talk about parking in the interstate. All right.
Behind the guardrail.
Okay, so is there a next?
There is a next and a last. Page
Ah,
69. Repealing a fine that would be applicable for a violation that has been repealed. So 19 VSA section 21 subsection C was repealed in 2007. And it repealed subsection C, which would have allowed an agency to make rules for the use of parking places and picnic grounds within state highways and restricting parking for commercial purposes. There was, and this is language that's still in 19 VSA section 22, an $100 a day violation fine for a violation of those rules. The agency doesn't have the authority to set those rules under 21C anymore. It was repealed in 2007. So there is no need for the fine. It is repealing a fine that is attached to no violation. And again, this is something that should have happened in 2007.
This repeals a fine for violating a rule that the agency has never been given the authority to make.
Well, they had the authority, but the statute giving them the authority was repealed in 2007.
Okay, so they don't have the authority now. So this
Yes.
is fine.
This fine is obsolete. It is connected to no violation. There is no reason for it to be in statute anymore. Should have been taken out in 2007.
Okay. Okay. All right,
Not a very exciting batch of sections.
committee, questions?
Would a rebate amendment be germane on this bill?
Only if it has to do with transportation. Okay, it's Friday, don't,
Where's the tax on electricity for electric vehicle use?
we haven't done this yet.
There's a bill introduced to collect electric vehicle road use taxes.
Have we got any questions? Chris, have you got
It's
a
not segregated.
fiscal or any other kind of?
It's just.
Sure. Madam Chair, Faith was kind enough to post a fiscal note on this bill that speaks to these 5 provisions that Anthea went through.
Yeah.
It will serve as a good, useful summary to remind the committee about what each of these sections does. But in the interest of your time, I wasn't planning to spend a lot of time on it because, spoiler alert, there's no significant fiscal impact expected from any of this language.
That sounds good.
Spoiled again.
Most of it is repealing things that are just old and ineffective.
Right.
It's cleanup you're exactly right, Senator. It's cleanup language and it's sort of conforming the statute to existing practices. If the committee is interested in all of the fiscal authorizations that are contained elsewhere in the T-bill, there are some fiscal summary charts posted as well, but those in and of themselves do not have a fiscal impact because they all need to be subject to appropriations from the big bill that you all will be seeing as well.
Okay, yeah. No, we aren't getting into appropriations, Jerry.
And Madam Chair, I want to thank you and thank Faith for accommodating us and accommodating this bill on such short notice. I know how busy your agenda is, and this bill, once you all report it, then has to make a couple more stops and then go to conference. So I just want to thank you for helping us keep this chugging along on the fast track.
Let's hope we can continue to do that. So committee, what is your pleasure? We removed some language that was connected to language that was moved, one in the 80s and another in 2007. The one fee that has been raised is the one for risking the existence of covered bridges, either over. No questions? Yeah,
If you want to drive into the same covered bridge and smash it, wait 3 years and the fine is only $1,000.
I was wondering if a baby carriage was included in the word carriage, and you better be careful where you slam that thing. All right,
Are you looking for a motion, Madam Chair?
I think that would be lovely.
I would move that we approve Senate Transportation's reports. Is that the right motion, or are we just moving it along?
Report the bill favorably.
Yes, there you go.
There we go, as presented. Okay, Senator Pearson has moved that we report H 736 favorably as it was presented, the Senate version as presented to us. Is there further discussion? If not, all those in favor say aye.
Aye.
Opposed say no. That carries 601. And the hard part, who'd like to report this one?
I could do it unless you're looking for my help on other bits.
Well,
No, I can.
you
Oh,
can,
there you go.
okay, good. Thank you. Senator Brock will report. Thank you. Good luck in your other stops.
Thank you, Madam Chair.
No recommendation.
Sometimes that's not such a bad thing.
That's true. Okay. Hey, is up there. Next on our, okay, we've got 15 minutes until, well, we can start because it's 5:10.
I've asked Graham and Abby to join you.
Graham and Abby are here. Okay,
No, they're not here, are they?
They will be.
okay, I am.
And thank you, Tony. Tony is delivering a note from Graham. So you
Okay.
have 4 pieces of paper to pass out to each.
Yes, that's what I was going to do, and I just got another piece of paper.
Yeah, I guess pieces of paper, but 4 packages.
2, 3. Okay, this is a summary. And this is the bill.
Oh, yeah, this is our wheelhouse again. Thank goodness.
Okay, I've only got 2 copies of the bill itself. I assume that's,
It's a strike all. I didn't copy the bill,
yeah,
but there should be 7 copies of everything.
so why is that missing? This is the side by side. That's that. Can I give you an extra copy?
You know what? It might be that Ruth never takes copy. I don't know. Did you do? Babe, here.
You've got an
Did you
extra one?
did you do a copy for all 7 of us?
I just did 7 copies for everybody.
Okay, so we
Okay.
should.
7
have
copies,
that.
so everybody could have one.
All right.
7
Senator McDonald, wanna
copies
pass
for
those
7.
down?
Cement.
These are decision points that Abby has typed up to help us make sense.
I'm
of
sorry,
what
I'm not
we're
there to
after.
pass out the papers.
That's okay. This is just, okay.
Yeah.
Here are the other copies. They're on the bottom of the file. So this is,
So is that
this is the
the
strike
actual
off,
language?
the
You
actual
want that?
language.
I'll grab it here.
You want one?
No, well, there is an extra, but I can also do it.
So who,
Did you put one on those?
I did not not the summary, not the strike all, but the tables I did.
okay, you give her that, because we've got, you need
What is it
another
that you
one?
want?
Here. Okay. I think we have everything.
We don't have strike holes on.
Here.
So Brock, that one?
Okay. All right,
Here, Mark, is this yours?
I think that's yours, Mark. I know I knew I handed 3 down there. All right. So we all
Do you
have
have it?
hard copies.
I just didn't have that.
Table.
Yeah. All right. Faith, I'm signing in with Zoom
Terrific.
without video, without audio.
So, do we have well, I don't, there, you're in.
Okay, I am in with no video and no audio, but I can talk.
Did you get? Do we know what they did on childcare? Next door?
I don't know, because when I talked to them yesterday, they were finished and waiting for things to come back. So I don't know if they're going to do anything they're going to do here or in negotiations, because some of this funding is going to be in the other budget. So,
Because we decided not to do the 5.5 million
Child care.
Yes.
childcare worker thing. And that freed them some money and they were gonna hopefully put it.
Okay, and I could probably accommodate some of that in the workforce if you want.
Yeah, yeah, okay, well, I mean, because we effectively didn't spend it, so that was part of
and
it.
we
So
told them what we would like them to spend it on, and they said they can't make any promises, but they would do their best. And that's probably as close as we're gonna get. Okay, so Abby is
Me.
here. Abby, we haven't seen you in a few days, but it looks like you've been hard at work. Okay, so this is it for my agenda. This is all right. Abby, why don't you take us through, I guess, the side by side? And maybe as we go through, you've got some decision points, so walk us through those, and when we get to the decision point, tell us we need to decide.
Thank you, Madam Chair. So for the record, Abby Shepherd, Office of Legislative Counsel. All three of those documents are under my name on the committee's webpage. Would you like me to share my screen?
I think we've all got hard copies.
Yeah.
Okay, excellent.
So
That's
we
actually a
can
little easier for me.
work our way through
Great.
those.
Okay, so I will start with the side by side. So this is a summary comparing both the House passed version and the strike all committee amendment that you have in front of you. And I, based on how complex the S53 proposal was, I tried to sort of model this side by side on that approach and tell you more or less what is being done differently from what was done in the House. But please stop me if my structure is confusing in any way.
Okay.
So I'll start on the left with section 1. As passed the House, as you know, they did create a new refundable child tax credit that is available to residents or part-year residents. And that amount was $1,200 per qualifying child, and for 6 and under. In your strike all amendment, in the language in front of you, it is a $1,000 credit for children who are 5 years of age or younger. And the phase outs have been changed. Otherwise, all of the language is the same in terms of the qualifying children.
Still the same qualified child.
Correct.
Okay.
I've really only, there are a lot of policy decisions that you've made that have led you to these amounts, but the language has really, it's just the numbers that have changed in the language. So the phase out amount has changed. I've also clarified in this language compared to the as passed House version that the phase out applies per credit per child, just to make that clear, that it's not the phase out to the full amount if an individual has more than one child. So the new phase out amounts are adjusted gross income of $55,000 or more, and it phases out above $55,000 of AGI. For every $10,000 of income, the credit amount drops by $125.
And could I just point out, committee, on the sheet that is the JFO sheet, there's this
Yeah.
chart which shows the shapes that are raised, particularly your interested in the shape.
Yeah.
I think it's a good looking shape.
There's only one shape there, which helps.
The charter's not in shape,
It's in shape. It's been working out and it's in good shape.
very fun.
Okay,
Yeah,
Okay.
so for comparison, the house phase out was $50. The decrease is $50 for every $1,000 that the income is over the threshold.
Yeah, it was much longer.
It was a longer phase out, exactly. This is a slightly steeper slope. Actually, one thing I'm realizing I did not note in the decision points for the child tax credit is that this still applies to both filing statuses. So it's looking at sort of a household as opposed to individual filers.
okay. So it is,
So it's a
Single parent.
55,000.
yeah, but it's the income level, not the number of parents that it's tied to.
I'm sorry, Madam Chair, I didn't hear
It,
you.
it's the income level, not the number of parents. right?
Correct.
The household
So
income.
it doesn't have a higher threshold for married filing jointly.
Did the house?
No, this has the same language as the house.
Yeah, it's unlike,
It could trigger.
it's a little different when we got the student loan deferment, but this has always been just the household income.
Yeah.
Okay. All right. So we've got questions on your sheet, Abby.
Yes. So why don't I walk you through what is in sections 2 and 3, and then I'll go through my many questions. Section 2 is the same as what was in the House. That adds a section requiring the Commissioner of Taxes to make one annual advance payment. So the credit will be split in half starting next year, 2023. That takes effect in 1 year. And that is actually on my list of questions, whether you wanted to continue to do that. And then section 3 has been moved. The House version of section 3 sets out the statutory purposes. You know, it's tax expenditure has to have a statutory purpose. That's just moved into a different part of the bill. The House version of with section 4 has been moved to the Senate section 3, and that requires the Commissioner of Taxes and the Commissioner of Children, Commissioner for Children and Families to report back to the legislature about the possibility of making advanced monthly payments. As Commissioner Brown has testified, there are potentially issues with the SNAP program. If the state were to make recurring payments, those might be included in calculations of income and resources for determining whether an individual is eligible for SNAP. So this requires a report back from DCF and tax explaining or proposing possibilities to allow for a monthly child tax credit without triggering that SNAP inclusion of that income. So that is still in the language, and those were my first bullet point question marks for you, because I don't believe that the committee has explicitly decided whether or not to keep the advance payment of half of the credit starting next year, and whether you still wish to have a report back about the monthly payment option.
Okay, committee, thoughts on that, Senator Pearson?
I don't know what you think, Madam Chair, but I actually heard the commissioner say, if you're doing it, keep it as one time, once a year. And I found that compelling. And you know, the more we make, I mean, clearly there's a cash flow argument to do it as monthly, but at the same time, that's just going to mean we blow more of the money on the bureaucracy. And so I'd be inclined to get rid of that 2023. I would keep it as once a year and take out this report, but you know, I don't feel strongly, but it was something that when the commissioner said it, kind of made sense to me. So.
And if there is a SNAP impact, it would be for just 1 month.
Yeah,
Okay.
that's important as well.
Okay, so I think what
I
I'm
don't know,
hearing.
what do you think, Jeremy?
I'm just not family budgeting, it would, I think, be helpful to, if you could divide it in half, and I'd do the study on whether or not you could do that. Monthly, you're gonna divide it down, it's gonna cost you more money to send out a check than to, it's not going to make that big an impact. Twice a year, maybe, but $1,000 isn't that much money. You might just pay off your credit card and then run it out the rest of the year.
Are you saying get rid of the twice a year payment, but move the study to study twice a year?
Have we got twice a year in here? No, we've only got one lump sum payment.
It does add starting next year a twice a year payment. So
Okay.
it's an advanced monthly payment. It does have an opt-out, but it would be twice a year starting in 2023. And then the report is it feasible to do monthly payments?
Okay. Senator Bray.
So I like the idea of reducing the administrative overhead and making the program simpler. And so if that means one check a year, that seems attractive. The other thing to me is if we start sending out in other smaller increments, start to get a little bit towards managing people's budgets for them in some way. That feels kind of awkward. So I'd rather let them get it, and however they spend it, however fast or slow.
So do we want to take out the goes to twice a year? We can take it out, we're gonna negotiate.
Yeah.
Okay, so we're just gonna go with one lump sum.
You want to study twice a year? Or take that study out, or study every month?
I don't want to study every month.
I don't either.
Why is it different than any other credit?
Because in particular, low-income families have a cash flow problem with that.
Aren't there other credits that are low-income credits?
Yeah, and one of their drawbacks is that they're once a year.
Okay,
the deciding factor for me would be the commissioner's comment, if that in any way affects the SNAP benefits. The protection against that.
well, I think we're not gonna know that. What I heard the commissioner say is he can work with all his state-based programs and do a workaround. SNAP is federal. He said he would apply for a waiver. It would be easier if it were just 1 month. And, but we're gonna have to wait and see if we get the waiver, and I think we also told him we wanted an automatic
You'd want to.
re-enrollment. We didn't want them to have to go through whatever pages of,
But I mean, if people feel that you want to spread it out, we could make it contingent upon the waiver.
okay, we aren't spreading, we're not spreading it out.
I'm fine with doing one sum.
Okay,
Yeah. So we're taking down to one payment, sounds like. And then do you want any study at all?
let's leave the study out. I mean, that, they want it, we can talk about study, I mean, it gives us something to work with.
Do we want to push the department to deal with that enrollment thing, Madam Chair? Or take them?
Yeah, we could put in there that the commissioner shall apply for a waiver for those, if there's a SNAP benefit, that perhaps we should say that the commissioner should take all possible actions to ensure that the receipt of this does not negatively impact the benefits or
SNAP benefits or
any benefits.
or force the need to re-enroll,
Well,
something like that. That makes sense, Abby?
Sorry, I was still muted. So under the current structure, if you are removing the advance payment, it's just one lump sum. There is already an exclusion under the SNAP law that allows for that without including it as resources. It's only if it's reoccurring or recurring. Sorry, I always say that wrong.
Okay.
So if it's a lump sum, it's already excluded.
All right.
Ridiculous.
Does
That was
recurring
easy.
mean one time or multiple times during the course of a year, as opposed to recurring annual payments, which this seems to imply?
My understanding, and I don't have that language directly in front of me, it would take me just a moment to pull that up, but an annual, like one lump sum, I believe the word one is used.
Mhm.
But I'm sorry, I don't have that federal language right in front of me. What I understood is if it's monthly or more frequent than once a year is when it becomes a problem and the income needs to be
We're
included.
hoping to get 5, 10.
We just reported one.
Oh, we did, yes, Senator McDonald, we did just do the transportation bill.
This is an amendment to,
All prepared.
It's all prepared.
or our approval of the transportation bill.
All right. And we're hoping to get 5, 10.
It's just that we reviewed the amendment.
We just approved it as it came to us. Okay, it should be so easy. Okay, I think we're gonna go on to one lump sum, probably means one lump sum a year. Abby, you can check on that with the commissioner, and if we have to make an alteration, we can always do, a floor amendment if we get it out of here. Senator McDonald?
How many, is there a large number of people who receive this child care credits? Also get EITC payments?
No one has a number, but there is an assumption, yes, that there is an
So I
overlap.
would suggest we consider, if the EITC stuff goes out in April, we might schedule a child care for maybe 6 months later. And for reasons that might provide balance and not have a whole bunch blown back, but wrong word.
That would give you 2 payments a year.
But it is interesting that would it be a delay? So you prove you qualify in April and then we give it to you in October?
I don't know the answer to that.
Yeah, no,
I was trying to not give folks that live on the margins a big chunk of money once a year and perhaps find a way to do it twice a year, but not create more burdensome work. If that were convenient.
We would have to ask the tax commissioner that, I think.
maybe that's our landing point and compromise.
Just.
Yeah, that could be a way,
No,
yeah,
that's
I think you're right on that. Okay,
Okay.
so, keep going, Abby.
Okay, so just to confirm, the decision so far that I understand is to remove the advance payment of the half credit and to retain the report on monthly payments.
Yeah,
No, to remove the report.
no report.
You don't want the report either. I'm sorry, I thought you still wanted the
And I
report.
think
Okay,
we
no
just
report, no
need
payment.
to- The thing we want to check, and we can check it perhaps as we go into negotiations, is rather than that, we could perhaps talk about doing it 6 months after the EITC, since there's going to be a lot of overlap. We've got 2 major payments coming in for many families. We could do one in April and one in October, which would kind of stagger them and give them a little better cash flow, so.
Are you
But-
proposing we do that?
No,
or-
I'm saying that's something we could do when we go to conference and we'll 2 payments.
Yeah.
All right, and that will give us time to check with the tax commissioner and find out if it's possible.
Just to orient Senator Hardy, Abby has a few decision points in our construct from yesterday, so we're just getting started through that.
Okay,
Apologies, I'm sorry, I'm late.
so we're on
Yeah.
number 3 on the side by side. We dealt with the part that's the same. Okay. Yes, the next one.
The next question was that the language does not explicitly address the case for non-filers. So like the EITC, this child tax credit was drafted as being based on what the taxpayer is entitled to take federally for the child tax credit, which implies that it does not require the taxpayer to actually file and receive the child tax credit federally. So that sort of begs the question of, if there is a non-filer and they're eligible, is there a requirement that they file? They would need to file most likely in Vermont to be able to take this. Or does that need to be based on a federal filing, and how would that be rolled out? One option is some sort of a portal like what the IRS created for its 2022 advance payments of the child tax credit. And those were sort of outstanding questions for the
Portal
committee.
applies computers.
Yeah.
Yes, which would be, new administrative stand-up and burden.
Got any kind of a sophisticated computer system is limited.
What's the easiest?
Yeah, what's the easiest? In the good old days, there was a postcard. If you didn't owe anything, you just put in total earnings and sent in the postcard, and you got back anything that had been deducted. I don't know if we still have that. So we need to send.
So did the House address this, or this is
This is silent in the bill. There's no explicit direction as to whether they're needed. It does not require a portal like what the IRS stood up very quickly. It doesn't. Implicitly, it would require the individual to file in Vermont so that the tax department could provide the credit, but it also does not. This language does not require a federal filing.
Okay, so maybe
So the two.
could instruct the tax commissioner or the tax department to develop a simple filing form for folks who would, I mean, if you're working at all, you're having taxes deducted. Who wouldn't file? I mean,
And if they don't file federally, who of them files state?
they don't.
So there are income thresholds to meet before being required to file, and Vermont follows, I believe, the federal thresholds. And then you need, I think, $100 of Vermont income, but there could potentially be individuals that aren't filing that would otherwise be eligible for the credit. But would you like maybe session law language requiring a form, a simplified form process?
Tax department shall develop a form that will be made available to those that are owed the credit but would not necessarily be required to file. Senator Hardy.
Yeah, I think that sounds like a good middle ground. I do remember from testimony that the commissioner asked that there be some kind of official, I think he asked that they be required to file, but I think that might be, this is a good middle ground, because I think they were concerned about having no information from somebody.
Yeah.
And how they would manage that and verify all that stuff.
So, yeah, they at least, they said they checked something, they at least wanted a form with the names, ages, and perhaps schools of registration for kids, just so you could verify, there was a Johnny and a Joe Smith, and they did go to Barry City School. And that you could do with just a simple inquiry to the school department. Okay, so if we just put in the tax department shall devise a simple filing form, and it's in there, then if this proceeds through the process and the tax commissioner comes in tearing his hair, we will have time to refine it. Okay,
It's an amber chair.
I know.
I think he's already.
We'll get rid of the rest of it. It does that working with us. Okay. Okay. I guess, did we answer those bullet points, Abby?
Yes, thank you. So I can draft that and make those changes to remove both the advance payment in September and the report, and I will add a simplified form requirement.
Can I just ask a clarifying question, Madam Chair? What did you decide on the first two bullets? I think I heard Abby say you're taking those two things out.
Yeah.
Okay.
We're doing one lump sum,
Simple.
no study, I'm doing monthly. It costs more to do it than that. Okay, so let's move on. Child tax.
So the next, actually trying to think of the best way to present this. The only other sections in the as passed House version of H510 were amending the Social Security income exclusion and increasing all of the dollar amounts by $5,000. So the income thresholds and the amount that would be exempt are increased by $5,000. And then the effective dates. So I think from now on, we can sort of ignore the left-hand column of my side-by-side. I'm gonna go back to that. Sorry to have given you so many different pieces of paper.
I think, they had two things. We've got one they had, we don't have one they do. We've got a whole bunch of others. And that means we go to conference. All the columns are on the table.
One question, Madam Chair.
Yes.
And this is probably as much a strategy question as anything else. As I look at the JFO document, it shows the total proposed cost at 32.02. And I thought we had up to 36 in our.
We did the mobile home went on there yesterday. Brian, we spent some money, I think, in the way out.
50,000, the manufactured tax credit,
Yeah,
but I think that's in that 32.02 number.
We took out the child care worker credit
right.
and asked them to spend it across the hall.
All right, how much was that?
That's 5.5 million.
Yeah.
All right, so that's where the difference is. So actually, we're a little bit over. And that was my other question: is do we want to be a little bit over so that we have negotiating room in terms of where we are, what we want compared to what they have.
And I think
we don't have a board. Do we have any place to go, at least in terms of some of our initiatives?
And I think, as we go through this and with S53, there's going to be ongoing communications between, well, we're spending it this year, which is unusual, but the revenue committees and the appropriations committees and I can remember being here in May, and there was a reporter from the New York Times, and we were $1 million off. And everybody is running around trying to find $1 million. And she said, what is the big deal? I mean, $1 million, I would say, no, this is Vermont. This is why we don't have a balanced budget requirement, because we do balance our budgets, and $1 million is $1 million.
But Madam Chair, if
Yes.
but across the hall, they haven't spent it yet, though, until we finalize this. Is that correct? Or
We were asking about that before.
Yeah, I don't know what they've done across the hall. They hadn't spent it in the budget that was getting typed up because it was gone before we went over. But they have, the money for the House bill is in the House budget. So all of this will be getting worked out with the running back and forth between the halls.
We're
But they
gonna have
said
to
they
keep an eye
wouldn't, yeah, they
Yeah.
would do what they could. If we didn't spend it and send it, let it fall to the bottom line where they had some room to play.
I think we should next week, Madam Chair, remember when we go through that workforce bill and health and welfare, remember that.
Yes,
Because that might be an opportunity.
that wasn't the one we did today, right?
No, it wasn't.
No,
Okay.
but if you, in the bill we did today, there was $26 million set aside for spending from the budget for workforce in this bill, in 159.
Right,
And it
but
said it will be determined by whatever 703 looks like.
exactly.
So we could, even before third reading, if we wanted to, raise that number up and have, and workforce would be a perfect place to help these same people. who want to
Yeah,
do
Right,
it.
that's what I was thinking.
And then you have them locked in.
And if you've got a box, and we're gonna
Yeah.
be looking at it, we can look at that box and get.
Exactly, and then because Health and Welfare is gonna look at that bill next week, the sections on.
Quickly, please.
Yes, we will, so then.
No, quickly and health and welfare are not two words that go together.
Well,
My
that
answer
may be on its
There
way.
were bills yesterday.
Wasn't referred there, was it?
Okay,
Is that-
Was it referred there?
but
No,
No.
we're just doing a drive.
we're trying to get this
So we have
out,
something-
and
we have
I'm
something you
leaving
want?
at 4:00, so
Yeah,
let's
keep
keep
going.
moving. This is a holiday or
We're getting
moving day weekend. All right, so the next one we did, and I'm down to section 5, right? Or it's number 5 in the side by sides, but it's where the 5 on the left is not connected to the 5 on the right. It's just, these are the things we did in lieu of their larger child tax credit. Okay,
So actually, sections 4 and 5 work together. There's more information in 5. That's really what you did, but that required another change to statute. So section 4 on the Senate strike all column also deals with the child and dependent care tax credit. That is the existing credit that is applicable without income limits in Vermont. It just follows the federal credit. That's a 24% of the federal credit. That's removed from statute because in section 5, you are adding a 100% federal credit. And that's a bit of just the way the drafting works out because Vermont currently has 2 separate credits. There's the 24% credit, and then there's a existing 50% credit that's for lower income. So it's 30,000 for single filers or 40,000 for married filing jointly. Those income limits are removed and it's made 100% credit irrespective of income. Having said irrespective of income, though, I do just want to qualify that with it still follows the federal income requirements.
And is the federal following the federal? Is that why we still need it to be in 2 different sections?
So the first section in section 4, it's repealed. So there will no longer be 2 credits. It will just be the 1 credit of 100%.
Repealing the status quo.
Yeah, but I'm maybe I'm looking at the other bit. Okay. I might be looking at the as passed. No, I'm looking at draft 1.1. Is that from
Of today or yesterday's date, 414, sections 4 and 5.
yeah, section
work
4
together.
is not repealed.
The part that allows for child care and dependent care, the lines 7 and 8
Okay.
are repealed.
Okay,
Thank you.
we're replacing the 24 and 50 with 100.
For everyone.
Go
Yes.
up to infinity.
That's your income.
Yeah, I know, but weren't we talking about cutting it at 200,000?
No, that was
that a
the-
different thing?
That was,
Student loan.
That was student loans, okay.
That's my understanding is that threshold was for student loans.
so be
on-
long.
On my list of decision points, I just wanted to point out that Struck from this language is a requirement that the care be provided in a registered home or licensed facility certified by the Agency of Human Services as meeting national accreditation or national credential standards endorsed by the agency. That language was what was struck out in H527. My understanding is that because this already follows, and this is up to your committee if you wish to remove that or not, which is why I highlighted this. Again, it's following the federal credit. So having that requirement that it be in a registered home or licensed facility is an additional requirement. You could retain that, and that way it would function in the way that the current low income 50% functions. But that is another restriction.
So,
Now, two ends of that. If it's in a registered home, you've got, your local home care provider that's got, up to 10 kids. What you're leaving out is the neighbor lady who is in a registered home, but you're also leaving out the nanny.
Yeah.
So you're picking up, depending on if you want to help out folks that can afford a nanny. But we're leaving out two ends of the spectrum. And so what do we want to do? Senator Hardy.
Aren't there federal requirements for getting the federal one, and would we have to mirror those or not?
It currently does, to the extent that the credit is a percentage of the federal credit that's allowed to the taxpayer. As I was pointing out for the child tax credit language and the EITC language, it's what the taxpayer is entitled to. They don't actually have to be taking it or being allowed that credit amount. For this credit, it says the credit shall be equal to the federal credit allowed to the taxpayer for the taxable year. So in that case, that is what they are actually receiving federally. And that, because it's based on the federal credit, it pulls in any federal requirements for childcare. So in that case, and that is current law, that has the working or looking for work requirement. But in terms of the type of care, I don't believe that there are, it's not as restrictive as under current law where it's a registered home. For example,
so federal law there, it's flexible. It could be a nanny.
It's more flexible than what is under current law. Yes.
I favor the way it's drafted here because it's flexible. It doesn't force us to entertain all different versions of what it looks like. If you're a family and you're paying for dependent care, then you would be eligible, right? I mean, that under whatever it sort of mirrors whatever the federal.
Yeah, so I guess I'm inclined to follow the federal law the minute the minute we start cutting out our own, there's the homestead, there's another 15 pages in the tax book.
So the language that we're striking is in addition to the federal law. If we strike it, then we're just chasing federal law, right, Abby?
That's correct.
Okay.
Yes.
Because also, when we were talking about this, as saying that it was after school care and summer camps and
That's all
elder
we're
care. And so with this language,
it would have to be in some kind of a registered after-school program. It would leave out paying your next door neighbor. I'm sure left out my daughter paying a babysitter.
it does require though documentation of some kind.
Yes,
So if it is your babysitter, you have to have actual
yes, you do have to have, you do have to file. It is a tax.
Yeah, I've done that.
My tax preparer just yesterday said it's the feds say anything that is looking after your kid while you're working. That's sort of how the feds look at it.
And the provider does have to provide a tax identification number. So it's either I think it's employer identification number or social security
number, right?
Yes,
Can be the
that's right.
Sure. I guess there's
Yeah,
some
Social
security number, yeah.
Okay. So we ready to go on from this one?
So we're sticking with what the House did, or what is in this draft.
We're sticking with what's in this draft, which is not what the House did. The House,
Right, they didn't do one.
they did the registered home. Oh, no, the current law, they didn't do this at all.
That's correct. I'm sorry, I might have
We
introduced
put
some
that in
confusion.
Probably when we have been trying to upgrade the quality of care in childcare. Unfortunately, we didn't upgrade the money to pay for it. So I think on this one, we're trying to help out families financially, not promote the childcare industry. So, okay. All right, so we're on to student loans.
Student loans is the next section of your bill, and that's in section 6. So this amends the taxable income definition by allowing a deduction for all interest paid on a qualified educational loan for costs of attendance at an eligible educational institution. And both qualified education loan and eligible education institution are defined under federal law for the student loan deduction. And further down, not in the taxable income definition, but within the income tax definitions, it adds qualifications. So it explains what a qualified resident taxpayer is, and that's a taxpayer who has either $120,000 or less of adjusted gross income as a single filer, or $200,000 as a married filing jointly filer. And what I had not was not clear from your discussion yesterday was whether you wanted to apply a phase out beyond those income limits. So the 120,000 for single filers and 200,000 for married filing jointly.
What's that, Madam Chair?
Yes.
What does someone get under the federal law now in terms of, they get all their interest deducted?
No, so that is the $2,500 cap. And then that itself, that amount is phased out as their income increases. And for a single filer, it's 85,000 of AGI, and married filing jointly is 170. So above those amounts, the deduction amount, it gets smaller.
So we left the $2,500, but raised the income level from 85 to 120 for single, and from what something 200, 150 to 200 for married filing jointly. I'm not married, I'm not clear where we started, but we raised both levels of income, but we did not raise the amount of interest income that could be deducted.
I don't think that's.
We
That's
did.
not-
So maybe I misunderstood, but this language allows the deduction for all interest income, but you could have the
Oh.
2,500 cap if you wanted. That may be my
Okay,
misunderstanding.
then we did do
Because otherwise,
I had different things.
it only advantages upper income.
upper income.
People with
Yeah.
student loans, so that cap, taking out the
Okay.
cap for student, for this treatment is important.
I misunderstood that discussion yesterday.
It was-
That's fine.
Is a piggy, do students get any Vermont deduction presently by piggyback
Yes.
on the federal law? No?
That's a good point. Yes. So the deduction federally is included in adjusted gross income. In Vermont, adjusted gross income, and Graham is popping up. Might be able to explain.
Yeah,
It's above the
so
line.
yeah, for the record, Graham Campbell from the Joint Fiscal Office. The student loan interest deduction is part of adjusted gross income, and so the federal student loan interest deduction is calculated based upon what is called modified adjusted gross income, which is basically your total income minus a lot of subtractions within the pre-AGI world, except for the student loan interest deduction, and that is your AGI for the student loan interest deduction. But what gets carried through to Vermont is AGI. So the federal student loan interest deduction is already baked into AGI when it hits Vermont's forms. And so I mentioned to Abby, this is a little bit weird because you are constraining the student loan interest deduction in Vermont by adjusted gross income, but that adjusted gross income includes the federal student loan interest deduction. So I think it's a committee policy decision whether you want that to be the case or whether you want the income limits here to be, you know, the same modified adjusted gross income that the federal government uses or some other measure of income.
So we're giving a double state deduction for people who are in the thresholds already by doing this?
So you are not necessarily giving a double deduction. You're giving a deduction beyond the federal, I believe, is how this works.
Beyond 2,500%.
Well, we're doing that, but when it says 120, that's federal AGI, right? So it's really 122 minus the $2,000 of student loan interest that you're right. Now I'm not saying that right, but that's kind of what you're
right. So suppose someone had total income of $120,000, and then the only thing that they had student loans and they deducted $1,000 from that. The AGI limits that are used for the student loan interest deduction would be 119,000, not 120. And so what you're saying here is that you would be using the income limits that have the federal student loan interest deduction already baked in. And that's not a huge difference. The AGI and the pre-federal student loan interest deduction number are not far off, but it's just a little bit, weird, I guess, is what I'd say, because you're sort of comparing, you're looking at an income measure that includes the federal student loan interest deduction already in it.
Okay, so the income level we're looking at is probably, if they've already deducted $2,000 of student loan interest, the income we're looking at is $2,000 less than it actually would be.
Yeah.
So when so if I'm making 120,000, I'm really making 122, and we're letting you take off all your student loans, and something tells me trying to fix this would have the potential of making it.
What if, could we set those at modified AGI? Would that be the way to have it be a little neater?
You could. That's one alternative. You could use the modified AGI that's used for the federal one, which is it's literally, I think, total, like your total income minus some deductions, except for the student loan interest deduction. So basically takes your AGI, takes the student loan interest deduction out. And that's your modified AGI. So it's not a particularly complicated thing to do, but it would have to be written in statute, and the tax department would probably have to create something like a worksheet to have people calculate what that is.
Well then why don't we just leave it this way and recognize that it's not perfect?
Yeah.
That's another option as well.
Yeah.
Imperfection.
It isn't over here till it's over either. All right, so we got that one.
I'm just wondering how much this is worth to people and to whom.
There's a chart.
Yes, actually, that chart for it.
I gave you that chart yesterday, Michael.
No, I gave it
What?
back.
You want to see it again?
Yeah.
I'll dig it out.
It's percent.
Oh, Chris sent it to you.
Okay,
Well, dig it up
can
there.
we go on to the next section?
I think so.
Okay. Retirement income.
If I may, Madam Chair, I just wanted
Yeah.
to confirm that the committee did not intend to have a phased out amount of the deduction.
No, I think,
Thank you.
It's fine.
yeah, it is what it is.
When you're earning 120 grand, you're not a broke
No, wait,
student.
Where are we getting retirement income exemptions?
So the next two sections hopefully won't alarm you. The drafting looks like a lot is happening here.
Yes.
And that is because the Senate did pass out the exemptions for military retirement, civil service retirement systems, and other similar contributory or non-contributory systems. In that language, it was $5,000, or it aligned with the current statute income thresholds for the Social Security exemption. But because you want to do the same proposal as the House H10 510 proposal, where Social Security income limits are increased by $5,000.
No, we didn't. We are doing that.
Because
we talked about, we wanted to know the data.
All right.
Okay, so the language does show that, and if you didn't wish to do that, then section 7 and 8 could just come out of the bill.
It was commercial, wasn't it?
Yeah, because it was Graham that said that's an ever-growing exemption. That's like, if our child tax credits started to grow, we would be very successful, but.
Well, is this the data that, does Graham have the numbers for us to look at?
Where is?
Shows the number of people and the average amount that will be given out.
It's in there. I really don't want to put it in. We're gonna be negotiating this thing. And
Well, so,
if you want if you spend it here, you don't have it for the childcare workers.
Well, it's not very expensive.
It's not very expensive. It's
This
already included
here.
in the 32.2.
yeah, no, I agree. I'm not wed to doing it. When we were talking about it, we said, well, what would it, if we did it, we would also want to make the commensurate change to the civil service people and the military pension, and so we needed to understand that. And that's.
So Graham,
That's
why don't
what I
you
got.
tell us what it is?
Yeah, so I
I'm not-
apologize.
I don't know that I have your sheet. Here it is. No, that's number of children. All right.
I think you have a paper copy.
No, I don't.
Something will get stuff passed out here.
All right.
So it should be a document on the committee's webpage called H515 proposal.
Yeah.
The total cost of this proposal is $32.02 million. Abby and I were under the impression that the Social Security exemption expansion from the House would be included, and that also the income thresholds for the retirement exemptions that this committee passed in S53 would also be bumped up by the commensurate amount as a Social Security exemption, so $5,000. And so the cost of the House Social Security exemption is $1.67 million. And I estimated that if you expanded the income thresholds for the retirement provisions that you passed in S53, that would increase the cost of those provisions by $50,000 total.
Yeah, it's not very much money.
I thought
This
I thought we had decided this.
I did too.
No, we did in 53, the military exemption. We did it in 53. It's still sitting out there to be negotiated. If I just have problems right now with the idea that nobody should pay taxes. And we've put it in so that everybody is getting the same benefit up to a median income. And we're gonna have to negotiate this. If we put it in now, we don't have anything to negotiate with anybody.
I don't think that's necessarily true. The child tax credit is much smaller on our side than their side. And
Yes,
so-
okay, but then that's less for you childcare workers. And
Well,
you need to have some room to negotiate, something they want that you don't have. And if they want this, then we will negotiate it. Why are we giving it away now? We already have a big pension bill sitting in there we're gonna have to negotiate, and this will just muddy those waters.
Well, I guess just in terms of what we're trying to do, we're trying to help Vermonters with this type of tax reduction. The one thing is the second oldest state in the country. I'm just concerned that we don't deal with Social Security sufficiently, and we don't deal with it in a comparable way that we're dealing, in this case, with childcare. We're taking the child tax credit and 22 million, or depending upon the house's version, a bit higher there. And here on this side, we're dealing basically with a very, very small amount. And on a per capita basis of the recipients, we're starting with $1,000, for example, per child, and multiple children in the family. But for our older people, it's the second oldest state, we're giving them $123. And it just, to me, doesn't seem balanced.
They keep coming.
We gave Social Security about 5 years ago. So we are not
Yeah,
increasing.
not even 3 years.
Yeah, about 3 years ago, whenever we did the code, we picked up civil service and municipal civil service people. We picked up military pensions, not to the extent people want, but those are all still out there and they're all gonna be negotiated. And so isn't the child care worker credit. I know there are very strong feelings across the hall, and if we do Social Security, which is an ongoing, growing exemption, I don't think it would be as favorable to our child care thing. And you want to keep your options open.
We can have people who collect Social Security who are coming here now. They're growing, not just the people who are getting older, but people who retire here, they're coming. Kids, we see that decline. So why are we rewarding people that are coming here anyway, instead of enticing people that they're shrinking to try and reestablish them?
I think what I've been told is if we really want to help people, we need to look at that aged, blind, and disabled, which are our poorest, bottom of the heap. And they're pretty close to starving to death, and the cost we're paying for them on Medicaid for care is you couldn't go to the budget Econo Lodge for the amount we're paying a nursing home to care for them. So there are other areas that we can look at, and we're doing a lot in this bill. And remember, this committee didn't want to give all the money away because it might not be there next week or next year. Senator Gray.
I hear what Senator Brock's saying, and the thing I'm wondering though is the average income of the people that we're trying to help, whether or not retirees as a pool are better off and have better control of their expenses than a young family.
For an awful lot of people, Social Security is their income.
Right, but they frequently own their homes. And young families do not.
School tax.
School taxes.
Well, I mean, I guess I'm happy to follow your lead, Madam Chair. I think I'll follow your lead in the sense that this is not resolved with this decision. It's a live part of the next month.
It is in their bill. And it will be part of the negotiations.
I don't know if it changes the vote here, but that's something you're considering.
I don't know what they're gonna hold tight on. But I wanna have something that we can give them to get those other 4 things that we just picked up. And we'll, we need to have some wiggle room in here. On the 5, and this, the 5 million.
One way to do it is to lower the amount of the child tax credit in our bill so that there is more. And one of the ways to do that is to offset it with Social Security and then negotiate.
We've already lowered the child tax credit way below what they have in order to get the child dependent care or to get the, the student loan deductions. We've got the affordable housing tax credit going in next. So I thought when we left last night, the fact that this was a growing expense in a time where we really don't have more than 2 very strange years of revenue to feel confident that this money is going to stay, that we weren't going to spend it all. And trust me, you aren't going to back down. You might be able to back down on student loan interest, but you're not going to back down on the Social Security exception. So, statutory purpose is.
Yes.
Who writes that?
This is section 9 of the bill. These are required under statute whenever there is a tax expenditure that's enacted. There has to be a purpose also enacted into statute. Let's see, I'm just looking at the language so I can let you know what each of those is. First of all, because the 24% child independent care credit is no longer in existence, that's being repealed in the list of statutory purposes for tax expenditures. And there are some conforming changes to what will now be the 100% child independent care tax credit. Typically the bill sponsor will write a statutory purpose. So the Vermont Child Tax Credit was supported by the Ways and Means Committee that proposed H510. And that statutory purpose for the child tax credit is to provide financial support to families with young children. I have sort of put what I've understood from the committee's intent into subsection Z of Title 32, Section 5813. If the committee wished to review that in the actual language draft 1.1. The statutory purpose of the exclusion from income of student loan interest paid in subdivision 5811, sub 21, sub B, sub small 6, Roman numerals, is to lessen the tax burden on Vermonters with education loan indebtedness. And you could really insert whatever purpose you would like here, whether it's to provide relief or some of the other purposes are, for example, for the child care and child dependent credit, those were to enable Vermonters to stay in the workforce. Typically, a lot of the credit statutory purposes are to provide either relief or assistance to whatever target audience is helped by the credit.
So R is presently in statute, and what we took out was low income.
That's correct.
Right, that's for the child and dependent care.
In R, that's correct. And then the 24% credit is the statutory purpose is repealed because now there will just be the 100% credit.
Okay, and then
sub C.
The purpose for the child tax credit is to provide financial support for families with young children, not necessarily children in daycare. And then the third purpose is to make interest paid is to lessen the tax burden on Vermonters with education loans. Okay, Senator Hardy.
Thank you, Madam Chair. Yeah, I'm not wild about the phrasing in Z. I'm wondering if we could change it to something to something like improve the affordability of education, higher education, or something like that. I don't love the term tax burden. It's very loaded. And I mean, really what we're trying to do is make higher education more affordable for Vermonters.
Would you like me to use that phrasing?
Is to make, well, we're not making higher education more affordable, we're making debt more affordable. Right?
Well, it's to lessen the cost of higher education. I mean, the cost includes the interest you're paying on the loans.
Or the financial impact of higher education.
Yeah.
That,
For people that have to borrow.
Yeah.
Or to lessen the financial impact of
Higher
higher
education
education
debt.
debt. Yeah, okay.
okay.
Did you get that, Abby? To
Lessen the financial impact of higher education debt for Vermonters.
People that
It's a mouthful.
They always are. I believe I took lessen the tax burden from another statutory purpose. I tried to copy those, so I apologize if that was, they are a bit more partisan because their
Well,
purposes.
listen, that we could lessen the debt burden rather than the tax burden.
Yeah. But
Well, I think we've got it.
yeah, lessen the financial impact of higher education debt. Or lessen the impact of financing higher education.
Lessen the impact.
Pardon me? Yeah. I like impact rather than.
40 years ago, people didn't have to borrow, go to college.
And only your dad had to work.
Right.
G.E. Willikers.
Okay.
To lessen the,
For my generation to keep its prosperity, but then 2 generations later, have to borrow to go to college, is that?
I know, everybody hates us. We have made life too expensive.
Don't be a
lessen
ruin
the
the planet, Madam
financial,
Chair.
all right. Lessen the financial impact
Of higher education.
education. Because debt is part of the financial impact of higher education.
But not necessarily, and this is only impacting the debt, so.
Okay,
I don't
to
see
lessen the financial impact of higher education debt.
Yeah, yeah.
We're good with that, Abby.
Okay,
Should.
thank you.
Ship it.
Great.
Okay, that's done. Affordable housing tax credit.
The language that's in section 10 of the bill is from H4 37.
And
I
you passed
believe-
that out twice. Okay,
So it's a $250,000 increase. And then the final section is the effective dates. Several of these, let's see, subsection. So I'll read it chronologically. So the effective date section takes effect on passage, as would have the report on monthly advance payments that will come out. Subsection B has the bulk of the bill in it. Subsection C will be removed as well because that requires the advance payment in September. So subsection B makes all of these tax statute changes effective retroactively on January 1st, 2022, so that they will impact next filing season.
okay.
And finally, and this might take some back and forth if you prefer, I also need the title of the bill would need to change. So it now reads an act relating to Vermont tax expenditures, but that could read differently if you'd like.
Yeah, tax expenditures to support families. Isn't the miscellaneous tax a very similar title? That gives us as much as we get.
Relating to tax.
Using tax reductions instead of tax expenditures.
Yeah, tax.
I think the
Tax
official word
reductions
is
for
tax
Vermont
expenditures, but
An act relating to tax reductions for Vermont families. So if we get to like.
Is that legit, Abby?
and that,
To tax reductions for Vermont families. Yes, we also try to ensure that our titles are as nonpartisan as possible, and that I think passes the sort of sniff test. Yes.
Is that okay with you, Randy?
okay, Abby, how long will it take you to get us a clean copy? Will it be possible to vote this out today?
Yes, yes, I can do those changes and let me check. What do you? The only concern is being able to have time to make sure it's edited. But if I got you an unedited
Shortly
version,
after 4, do you think you can have it to us by then?
yes, yes,
Okay.
absolutely.
So committee, why don't we take a half-hour break and check back here, and if Abby's got it done, if I hear she's got it done before that,
So this.
I'll have Faith round you all up, watch your phones. And Faith, we can go off live, we're just waiting for our drafter.